And I'm now sharing the results. Let me know if you can see everything.
Yes, I will read them quickly. First question, the EU surveys like to produce valuable data and so on. 57% disagree, 43% strongly agree. So our audience is split on the fact that the EU survey will give data. Second question, the EU goals for 1 gigabit per second for everyone may be official policy, but is it the right standard? Only 14% agrees, 86% disagrees. Then maybe we could have asked what was the right target to this 86%, but it's an interesting answer. Third answer, ensuring EU as the critical digital infrastructure it requires major regulatory reform across multiple policy domains. And here 86% strongly agree that we need some major regulatory reform, 14% disagrees. For question, a rethinking of net neutrality rules would be, and there are four possibilities. Necessary and sufficient for restoring ISP ability to monetize increase in traffic, 14%. Necessary yet not sufficient, 57%. Unnecessary, useless, 0%. And unnecessary and even detrimental, 29%. So the group is split, but there is a majority from the fact that it is a necessary reform. Finally, do you think that a large online platform would be incentivized to vertically integrate? No, in order to not to be subject to regulation of the ISP, 0%. It would depend on the indirect incentive the regulation gives, 29%. Yes, in the medium term, ultimate development is a medium term ultimate development business strategy, 29%. In some circumstances, depending on market dynamics, 43%. So the issue of vertical integration as a consequence of the fair share debate is a possibility, or in general also vertical integration of platforms. Okay, let's restart from these elements. This second part of the discussion will be conducted this way. I will open very quickly with a few considerations, coming back to the previous panel. Then we will give the floor to our 5 distinguished speakers. It will be first Dr. Jakob Genier, Vice President of European Affairs of Deutsche Telekom. Then Jean-Jacques Sahel, Asian Pacific Information Policy Lead and Global Telecommunication Policy Lead at Google. Also chair of the Board Strategy Committee of the International Institute of Communication. Then we will have Giulia Iott, European Policy Manager at Sky, that will represent the Video on Demand Coalition. Audrey Scozzaro-Ferrazzini, Senior Director of Government Affairs at Qualcomm. And then Dr. Rosalind Layton, Senior Vice President at Strand Consult and Visiting Researcher at Aalborg University. So let me say that it's a panel that has a certain articulation in which there is industry represented, but under different ways. And we'll see how the position will decline. The idea is that the panelists, after my very short introduction, will have the possibility to have an intervention in which they will explain their position on the topics of the discussion. And then, however, we will call in the academic of the previous panel to comment this panel and give their final takeaways. And then finally, we'll come back to our panelists of this second panel for their own final takeaways in response to the academia debate. Okay, I think that what I want to simply do is to summarize extremely quickly what I heard before, but just with a point for each of the speakers, plus a couple of points that I would add myself. From Scott Marcus, the thing that I was that I found more important for our debate is the fact is something that probably could seem obvious, but Scott was saying that this is a two-sided market in the end. So cost causation is unclear. And I think this is very important for the debate. Probably is an obvious consideration, but I think that should be in the focus of the discussion. The fact that we are dealing with a two-sided market. Then from Will Heller, I was impressed by several things like for Scott, but one thing seems to me very important to underline, the fact that broadband is essential, but there is more than ISP out there. So the networks are getting more complex. And so this is another factor that should be taken into account. Giuseppe Colangelo told us several things also, but let me say that the most important on which he insisted, and I think is an interesting point really, is what is the market failure? And I think this is important to understand in this discussion. And finally, Antonio Manganelli said several things that were very interesting, but I think the most important, at least of my taste, is that all this debate on fair share may incentivize in the end, if it gets obviously a practical solution, OTT to vertical integration, changing the make or buy equilibrium of OTT. And so the question for telcos is, should they think twice before pushing in this direction? But so this is my quick summary of some of the points. Let me say that I would like to have in this discussion, and I will repeat in other things said by the previous panel, several streams of discussion. Let me just summarize them extremely quickly. Okay, first is, and many said it before, I think that it's very difficult to do this discussion and also to answer to this consultation without discussing net neutrality rules. I understand that the Commission has said that the net neutrality rules are not part of the debate, of the consultation, but I think that is not a reasonable choice. I think net neutrality rules are part of the discussion. And also, however, let me say that I'm more layman on this. The fact that they are 8 years old and they look old today, that's not so shocking. I mean, we are in a world that is moving extremely quickly. So there is nothing wrong in the fact that a regulation 8 years old may look old or may be needed to be reshuffled, as the title of our discussion. Second, the connectivity targets was also in the polls, also this. Most of our respondents say that they don't like them. I never like, in principle, connectivity targets without money behind them. So I always been skeptical of the public indicating something without backing it with action. And here it's not clear if this connectivity target have real backing or not. Maybe a bit more than in the past, probably with the public money that is moving in the past couple of years. But anyway, the connectivity targets are an issue that should be discussed in this consultation. Are they a given? Should they be part of our discussion? How do they interact with the whole discussion, really? A third element I want to underline, I already mentioned because it was a William Lair issue, main issue for me, is the increase in network complexity. Clearly, there is this convergence of mobile and fixed in a different way than in the past, in which they are becoming really the same thing operationally for consumers and for connectivity, but there is not only that. So this network complexity is an issue, and so is a part of the discussion. Then definitely there is the consumer interest question. Consumer interest goes into the discussion when, and in fact is one of the points of the consultation, because once you start discussing about how to change the equilibrium of the value chain, in the end you are also impacting the consumer, as was also discussed in the previous panel. There is the fair share contribution issue. Obviously, we will hear about it. Let me say one thing psychological about the fair share. I don't want to take a position, but let me say that I think that if you are a telco, in a moment of industrial difficulty, you perceive the fair share issue in this way. You had a very aggressive, we can define aggressive in the sense of effective, then is, I don't want to give to this aggressive value connotation, a pro-competitive regulation, unbundling in particular, but not only that, okay, particularly on access. Then you are in phase of a new wave of investment in which, in part, is interesting to discuss how much, how large a part, but a part definitely is asked to the telcos. So you have a new wave of investment, an aggressive access policy, competition policy that has pushed your margin and your price down in many countries. And so, and in front of this, you have this OTT world that looks like recently a bit less, to be honest, but rich and more in better economic condition, let's say. So there is this perception of unfairness, was mentioned, I think, by Manganelli, the level playing field wasn't there more than. So somehow, I think that the fair share debate starts from an unfairness historic perception. But we have to look forward. So let's look at this in a forward way. And finally, let me name also the elephant in the room, because it's interesting at least to mention it before we start the discussion. Is there also a geopolitical issue? Is Europe that is pushing in a certain direction because the big tech are essentially from the US and the telcos are, for definition, European companies? I'm not giving any answer to this. I'm giving just a question mark. And let me conclude saying that, and opening the discussion, that this discussion crosses two themes. One is efficiency, externalities. We want better networks because this is very important for the digital disruption, the digital transformation, and so there is an efficiency issue. And then there is redistribution, the fairness issue. And these two themes cross. And when these two things cross, it's essential to be able to distinguish them, because one is a political choice and the other is an economic choice. But let me open the discussion, asking Jacob Bergenier to take the floor. Jacob.
Yeah, thank you, Pierluigi, and I hope all of you can hear me well. First of all, I have to apologize. I'm not in a very silent room at the FTTH Council Conference in Madrid, but I'm very happy to be here. And I liked now your introduction. It almost sounded like a, you know, like somebody in a ring promoting the box fight that is about to start. I have to disappoint in that sense that I'm myself shadow boxing because I couldn't listen to the first panel as I just arrived 15 minutes ago. But I have some imagination what has been discussed. Let me therefore maybe first start more on a general point of view, looking at the package, the telecoms package that is out there, and specifically the consultation. The starting point is, and I just said that at a previous panel as well, when you listen to Commissioner Breton, he likes to talk about a paradox. The last time he did that, he did it in a blog post on the metaverse. And he said the paradox is that on the one hand, we have a steady increase of data growth, while at the same time you have, let's say, declining appetite to invest, low return, state of the telecoms is not well. Let me also use a paradox between vision and reality. And I think the vision is probably what the panel number one touched upon, which is the digital decade and the digital decade targets, which this time seems to count, and the Commission is eager not to fail them. Thus, they have KPIs, how to measure them, and thus, I believe also this consultation now that comes into the picture of how can we achieve these targets. But these targets are very, very ambitious. And also the expectations on our sector are very ambitious, because it's no longer only about can we somehow manage to tackle the investment gap, and I come to that in a second, and deploy what we do as our bread and butter business, which is connectivity, but also are we in the position as telecoms to look left and right from what our core business is. If you open up the digital compass and the digital decade targets, you will find, for example, also a slightly ambitious goal of deploying 10,000 climate neutral edge nodes in Europe, where the Commission sees telecoms as not the only player, but surely as a sector that could also become or be in the driving seat to pursue this objective. But for that, we need investments, just like we need investments to do what legislators rightfully expect us to do until 2030. Now, I'm not going to say any predictions that ETNO or any other association may be laid out in terms of the investment gap. I'm just going to quote the Commission, who quotes a study that is going to appear very soon in its consultation, where it says the investment gap right now to achieve those 2030 targets are 170, I believe 174 billion euros, 174 billion euros that we need to tackle in the next 7 years. And this is the reason why we're discussing this. And this is the vision. Now, let me confront the vision with the reality. The reality is that this sector is not doing well. Why is that so? We are investing 50 billion per year, which is, I think, many times more than other network industries, but still the ARPU is really, really low when you compare it, for example, to the US. We're talking about an ARPU for mobile 14 euros or for fixed 21 euros, and you compare it with the US, you are at 50 euros for fixed and 37 for fixed. The return of capital is barely enough to cover the cost of capital. So our investors surely are in a way skeptical when at the same time we are pledging and trying to achieve investing billions into 5G and FTTH. This is the reality. Now we need to somehow let them both meet, the reality and the vision. And that's why we appreciate, really appreciate, that finally after a couple of years where we didn't really see a lot of telecoms regulation, and if you know them, roaming, discussion on intra-EU calls, mobile termination rates, now is the time where we see it's really the vision of the Commission to help this sector get back on its feet. Why? Because this is important for everybody. It's important for end users, it's important for companies, because we are the motor and the engine that drives the digital transformation. So it should be all in our interest to deliver. Now, coming to the consultation, and I really would like to discuss in this 1 hour, not only fair share. We have had numerous discussions on it, but of course, I don't want to shy away from it because it is very, very important for my sector as well, this discussion. And when you dive into it, let me come back to what is the basis of this discussion. Now, you could say it is an ethno-financed Axon study that has been rebutted by other industry finance studies or reports. I think we should look at the European legislator, because this is the starting point of this discussion. And the European legislator, Parliament, Member States, Commission have together committed in the Digital Compass and the Digital Decade Declaration to find adequate frameworks or to develop adequate frameworks so that all market players who are contributing from the digital transformation will fairly contribute to the cost of infrastructure. This is the starting point of the discussion. And in a way, I feel like it's being neglected. And it's always about the telcos, whether it's the caps, which I think is not the right discussion. This should really concern everybody. And it comes also from the European legislator. Now, very quickly, and here it's a bit of a challenge as I didn't know what was being discussed, but what I heard from your summary, Pierluigi, just a few points. Where's the market failure? Well, that's exactly why we're having exploratory consultation that will probably, as a next step, then have yet another consultation coming. This is exactly the fact-finding mission that everybody is stressing. And I want to refer to letters that are often quoted by, for example, my government, that has sent to the Commission. We need to hear everybody. We need to have some clear analysis and some clear fact-finding. That's exactly what's happening right now. And normally I shouldn't speak with you, but I should be on the backgrounds, looking into those 62 questions, trying to bring our position, but also the position of others, and bring the facts and figures so that then the Commission can look into the question of market failure. If you ask me, is there a market failure? Well, the starting point surely is the interconnection market, but it surely is not the only sole solution for it. Why? Because what is being paid in this market today are peanuts. This is not why we're having a fair discussion around a fair share. It's almost really not a lot that is being paid in this market. And even the sums that are being paid today for a small number of percentage of commercial agreements, the content and application providers in some parts are not willing to pay. That's why my company, for example, has a very nice legal query since 1.5 years with another company in front of the courts, because we're not willing to accept that the other side basically just says, you know what, we're bringing your the traffic through your networks, but we don't want to pay you anymore for that. Second, net neutrality. Again, I didn't hear all the discussions, but of course it plays a role in this discussion. And I very much like what I just read in the chat from Scott Marcus. Yes, indeed, in those negotiations, net neutrality plays a role, because the other side knows whatever we are discussing here around what is a fair and reasonable price for a service that Deutsche Telekom provides to this company, they know that we need to deliver the traffic. I'm not inclined, I cannot block. And even if I were, let's imagine if I were, we have such high retail competition that what would happen is the consumer would just go from Deutsche Telekom to my friends from Vodafone or any other player. So their net neutrality plays a role. We are not saying this is wrong and it should be changed, but these are the facts and they play a role in this discussion, that for sure. On the geopolitical issue that you mentioned, Pierluigi, I don't know if we talked about the fact that the problem statement is not only a European discussion. This is very much so a US discussion. This is very much so a South Korean discussion, even so that BEREC said, you know what, I don't want to hear anymore what the telcos, what the caps, or what whoever says about the situation in South Korea. Let's go there, have a visit, and find out what is really behind all the claims in one or the other direction that this is hurting the internet ecosystem. I think that's very important, because even myself, I struggle to understand in 100% what the legislation is. I'm sure Rosalind knows more about it and can touch upon it later. But so we have this discussion not only in Europe. The question is, what is the solution in the end? And the solution might differ, but the problem description is the same. And now maybe quickly I come to the traffic increase, and then I let it go, and I'm happy to engage in the discussion. I supposedly think that probably in the first panel, everybody said, well, you know, first of all, the pandemic had a peak in traffic increase, but now it's stagnating or maybe even going down. I hear multiple panels these days where somebody says the metaverse is not going to increase traffic. Well, I can only tell you what we're going to do in this consultation. We look what they're asking us at the past 5 years, and we come to a very clear figure. There is a very new normal of traffic increase of between 20 and 30%. We don't think that's going to change. Yeah, the pandemic was higher, clearly, and it went further down, but I don't think it will go down to 10 or 5%. And now the big question is, does that incur network costs? There's one side that says not at all. There's the others who says yes, billions or millions. I don't want to engage now or lay out any figure to you, but I can clearly tell you that yes, there are network costs imposed. And when I hear the accusation, well, you know, this is how networks are being built, they have the capacity to shoulder these traffic increases, I will say yes, indeed, they can shoulder this, because we have to do long-term investments and we are doing long-term build out, and we have step costs, and we need to continuously increase the capacity of our networks, and we're planning with this. Does that mean that these are no network costs? No, for us, these are network costs, and they go through the whole element of the network and not only the backbone. And this is maybe as a last point why interconnection is the starting point, but let's not reduce the discussion just to interconnection, because interconnection looks at one element of the network, the backbone. It doesn't take into consideration the whole network. And that's why we believe the discussion is a broader one than just this. And now I'm happy to respond or engage and discuss, and thank you again for having me.
Thank you very much, Jakob. Very, very nice start of our discussion. I think we move to Jean-Jacques file immediately.
Thank you, Pierluigi, and good afternoon, everyone. Thanks very much for having me. It's a pleasure to be with you. Although, to be very honest, I would love to be back in Florence. I was there about 12 years ago talking about exactly the same things for some reason, but it's still nice to be back talking about this issue. And since we're talking about reality and what's really happening, let's give you a bit of a perspective on what we're seeing out there in the ecosystem. The internet content and application sector, or tech, works together with the telecom industry. We help them to manage their networks more efficiently, to save costs, to improve their customer services, and so on. That's just one angle of the virtuous circle that exists between content and access, where one motivates demand for the other. Innovation and investment in content, in apps, in services by tech companies encourages consumer demand for broadband and mobile subscriptions, which in turn make up a large portion of telecom operators' revenues. And it's that virtuous circle that's delivered huge benefits to users and to the economy, with unfettered access to a rich library of online content and useful apps that all contribute to media plurality and that deliver on the aims of the EU's digital single market. If I now focus on Google, we have a wide range of technology and business partnerships with telecom operators and across the value chain, across three main areas. The first one is core business development, where we help operators to maintain and even grow their revenues. For instance, in a simple way, telecom operators are resellers of Google Cloud or Google Pixel phones. That's just one angle. Second area is with enhanced technology and operations. That's where telecom operators improve the efficiency and reduce the CapEx and OpEx for their networks, for their platforms and their operations, thanks to our technological support. As one example, for instance, Deutsche Telekom are moving their 5G core network into Google Cloud. They explained, I quote, that through Google Cloud's extensive expertise in data analytics, Deutsche Telekom will gain an even deeper understanding of its networks to achieve accurate planning, optimized operations, and better customer experience management. And we've got similar partnerships with dozens of telcos all over the world: Telefonica, Vodafone, Telecom Italia Mobile, and also with Orange, with whom we operate a joint 5G Edge Innovation Center in Paris. And the third area of collaboration is about new business opportunities, where we support operators to launch new and innovative services, where they take advantage of our technological know-how to venture into new markets and launch new products. And then on top of that cooperation with telecom operators and as part of this virtuous cycle, we're also a major investor in both digital and network infrastructure. We carry traffic up to 99% of the way to the user. We interconnect with ISPs closer to the user, making it more efficient and cheaper for our telecom partners to deliver the traffic, the vital last mile, to the users. And we invest in that way in different layers of the internet infrastructure, with 6 large data centers in Europe, in which we've invested 12 billion euros, in 21 subsea cables globally, 6 of which in Europe, in network points in 20 locations in Europe, 100 globally, where we exchange traffic with ISPs, and hundreds of Google Global Cache nodes to store digital content within the local networks of ISPs. And that's not just us, right? There's been a number of studies. Many of you will be aware of the Analysis Mason study in 2022, which showed that content and application providers, as a group, invested $883 billion globally in digital infrastructure over the last decade. And that is just in digital infrastructure. That's on top of the even greater amounts invested by content providers in the software, services, and content that are the very reason that users go online in the first place. According to The Economist just a few weeks back, this amounts to close to $400 billion a year in investment. So let's be careful about fair share. This is a virtuous circle where each of us contribute in our own ways and extensively for many of us. And in future, that symbiotic ecosystem between the players in this value chain promises to become ever more apparent and ever more fruitful. The partnerships between ISPs and tech companies will be key if we want to realize the full potential of emerging technologies, like industrial applications, for instance, where low latency, reliability, and computing power and know-how will be crucial. Now, let me turn briefly to some of the current discussions with the return of this idea of introducing network usage fees, which runs against the positive evolutions of the ecosystem. Let's be very clear, and I think we've heard a number of points to that extent in the past couple of hours. There is no rationale whatsoever for a new and heavy regulatory intervention or a fund or tax to support network deployment in Europe. In fact, there are plenty of negatives. So if we start with the points, I think some of them were made in the first session, so I won't dwell on the detail, but I'm happy to come back on each of them in the Q&A if needed. First, internet traffic growth is not exponential. It has been steadily going down year on year over the past 20 years, and it is predicted to be going further down in current years. On top of that, telecom operators' costs are not linked to internet traffic demanded by their users. The incremental cost of traffic has very little impact on telecom costs. There are a number of factual studies that have shown this over and over again. Additionally, the cost of carrying data has been falling steadily. And we're not the only ones to say that. That's why operators are telling their investors in investor briefings regularly, every year for the past few years. So generally, the costs are going down, and they're not always linked to traffic growth. On top of that, there are significant amounts of investment already going into next generation telecom networks, both from private and from public money, and from various types of investors, not just incumbents. And then if we sum it up, the reality is that actually the deployment of networks is going very well, even ahead of the Commission's own forecasts against the digital decade targets. If we look at the last official data at the end of 2021, fiber to the home was at 70% deployment, ahead of the US and ahead of the OECD average. It was 66% for 5G. It's much further in many countries in Europe by now. We know in France, it's around 90%. In Malta, it's universal coverage, etc., etc. We can go on. So we're actually well on the way to meet the digital decade targets, however ambitious they are, and there's funding available. Now, if we move on to the idea of an intervention, well, any intervention will first need to be carried out on an evidence-based impact assessment basis, including indeed to see whether there's an actual market failure, whether there is a genuine problem that needs addressing. And indeed, we and almost all other stakeholder groups worry that there could be many negative side effects if we proceed with such an idea. The first one, threats to net neutrality. Introducing payments based on traffic volumes would create discrimination. Inherently, it would risk undermining user choice and the principles that users have the ability to access and to distribute content and applications. And it's a slippery slope that would affect the open character of the internet and its global character, because there's nothing to prevent that payment scheme from being unilaterally extended to other content providers, whether in the EU, but also in other countries around the world who could be inspired by the EU, right? That would mean that European people and organizations who are active online would face new barriers to reach a global market and audience. Why? Because they would be forced to negotiate with and to pay each and every telecom operator in the world for the content to be accessible by users. This would have long-term disastrous repercussions for the good functioning of the internet, for trade, and for freedom of expression and information, because users would be unable to access the content of their choice on the internet, depending on where they're based in the world, which country they're in today. They wouldn't have access to the same content. This is a serious risk. And it will also be bad for consumers and for quality of service, because payments would result in inefficient traffic flows, in higher costs for data transmission, and a much more hierarchical, less resilient network architecture. All of that would result in lower quality of service for internet users and potentially higher prices. And there's other effects, such as distortions of competition in both the telecom sector and in the content sector that we could look at. And then finally, and importantly, this would be bad for Europe's economy, because a network usage fee would just be adding a tax on digitization. And that is what really should go against the digital targets, the decade targets themselves. What we're trying to do is improve things for European people and the European economy. That goes for utilization of content, services, and applications. Adding a hindrance to it, adding a new tax on it, just doesn't make any sense. So instead, we should really be having a broader, much more forward-thinking, thoughtful discussion. Think about other improvements that we could make to the telecom regulatory framework in Europe that could strengthen network deployment, strengthen the fortunes of the telecom sector, rather than introducing a misguided and unnecessary network fee. A few ideas. We could look to interventions that target specific problems and are tied to specified outcomes, like government grants for deploying fast networks in less economically viable areas. We should also think about taking a whole of the industry view. For instance, by ensuring that when we have investment incentives, like schemes to encourage deployment of fast connectivity, they are made available to both the incumbents and newer and competitive entrants and technologies. We should help industry to reduce or avoid costs with mechanisms such as copper switch off, or thinking about new ways of looking at spectrum, for instance, earmarking spectrum auction proceeds to support network deployment, again, especially targeting the less economic hard-to-reach areas of the country. And overall, let's remember what we're trying to achieve for our people and our economies. Governments need to foster the creation of compelling content, applications, and services. That's what's going to unlock citizen adoption and use of the gigabit connections. So governments should strive to encourage innovation by content and application providers and discourage actively hurdles to the creation of compelling applications and content. Without these compelling applications and content, with these hurdles in the form of network fees, how are we going to get adoption of the gigabit connections by users? They won't be interested in that upgrade. So just as a conclusion for now, I think we should really focus on the future, think about real problems, real challenges, real ambitions that we want for Europe, and think about the benefits of developing partnerships across the value chain, of making this virtuous circle work rather than undermining it. Think of ways forward that benefit everyone in the ecosystem, not plundering a sector for very unclear reasons, only to the benefits of a handful of other businesses. So that's it for my initial introduction. I look forward to the discussion. Thank you.
Thank you, Jean-Jacques. We move to Julia. Julia Yop.
Yeah, thanks, Pierluigi. Hi, everyone. It's a pleasure to be here. I have to admit, I have to basically rejiggle my speaking points because everybody has already mentioned everything I wanted to say. So I'll try not to be too repetitive, but we've heard also in the previous panel, really most of the points that we as VOD Coalition wanted to make. Before I start, though, I just wanted to maybe give a very brief introduction on who the VOD Coalition is, for those of you who are not familiar with it. We are an association of content provider streaming companies operating in Europe. And what brings us together is the fact that we all invest in and distribute content, especially European content across EU, and our membership counts both bigger and smaller members. So we're talking about smaller companies like Pickbox, Sooner, Universine, Belgium, Viaplay, as well as Sky, so my company, obviously, as well as bigger international companies like Netflix, Paramount, NBC Universal, Warner Bros, and so on. So as you can see, there's a lot of diversity in our coalition, but we're all very, very much united against the very principle of introducing a network tax. And I appreciate that today's discussion should not just be focused on that, and I will try not to focus too much on that. But as you can imagine, that's really the element of this whole consultation and this whole process the Commission has launched that worries us the most. And I'm particularly happy to be here today to represent part of at least of the content sector, because we have the feeling that this debate has been portrayed too much and too often as a basically fist fight between big tech and big telcos, when the reality is that the potential consequences and effect of a mandatory direct payment requirement or a network fee or fair share, how you want to call it, the biggest consequences will be actually on the content sector, especially the European content sector, including streaming companies, because of the very fact that our role and our purpose being is to deliver content directly to the consumers. And it's the consumers, as it was also mentioned multiple times in the previous panel, that request the content or drive traffic demand, not as streamers. And so this link is clearly means that we would, in any case, sooner or later fall into the scope of whatever obligation, if any. We hope not, but if any, will be put in place. So as I said, I particularly have to be here to talk about this. I wanted to start first going back to talk about the consultation, which we obviously welcome. It wasn't a given. We had heard, I remember in the very first months of last year, that it seemed like the Commission was just going to publish something right away. It wasn't really looking into this. So we're actually very happy that he launched an exploratory consultation, and I agree with Jacob on this. We are happy about it. It's great that it's broader than just fair share or narrow fees, that it also addresses other issues. And we really hope that this will lead to a more in-depth investigative process, hopefully to a proper public consultation on the fair share issue and impact assessment. So we really do want the Commission to look into this and to try and figure out if there is indeed a market failure or it probably needs to be addressed, because so far we have on our side, we have yet to see any evidence for it. And I appreciate that the Commission is also working on a study, Jacob also mentioned it, on this supposed investment gap. Looking forward to reading it, because this is one of our main issues with the consultation, is that there are a lot of assumptions. This has been also repeated multiple times in the panel beforehand. There are a lot of assumptions and not as much evidence as we would like to prove these assumptions. And the way why certain questions were phrased in a certain way, what there are elements of the ecosystem that have not completely been taken into consideration. Why there are only questions, the detailed question about the percentage of revenue invested in by ECNs, but not the kind of investments that content providers do, for example, in the internet ecosystem. So it's definitely broader than what the discussion is being on so far. And we really, that's, I guess, one of our plea to the Commission and to the EU is really to keep looking into the issue and not just apply sort of band-aid solution to a supposed problem that we have yet to confirm. As I mentioned, there are quite a few things that we're not quite happy with in the consultation. Another assumption, again, was mentioned beforehand, I can't remember exactly by who, but there is definitely a traffic increase. We can't deny that, but that doesn't necessarily mean that there is an increase in the costs. And I can say that we as Sky have internally, as we try to answer the consultation, I've seen that the costs have still remained quite, there may be a very marginal increase in the cost rates to data traffic increase. So there are all of these kind of issues which actually we think should at least be clarified. One other aspect is the fact that demand for the services seems to not be really taken into account. There are a lot of questions that look into the issues related to the supply of internet services and how to make sure that stays like that in the future. But what about the demand and take up of these services? We know that in a lot of countries where fiber rollout might be almost complete, but their take up is actually not quite as high. We don't see that being addressed anywhere in the consultation. So again, great that it's there, but it's not quite as complete. And I think that goes to the question Joanna asked at the end of last session. Is it future looking? Is it forward looking enough? Or is it complete enough? We don't quite think so. Generally speaking, when I mentioned that, obviously the section 4 of the consultation, so the fair share issue is what concerns us the most. Is that because, as I said, the way it's been framed by telecom incumbents, we really just don't see how companies like our members will not fall into scope. Whether directly because of a certain percentage of traffic usage is used as a threshold, especially at the national level. There are all these kind of calculations, but also because many, if not all of us, actually use the services of some of the bigger players, for example, cloud services or CDNs. And so even in those cases, even if only the so-called big players are included in the scope of a tax or a fee. The costs would then still be passed on very likely, but we've been told so to services like us that use their cloud services, for example. So in any case, we will fall into the scope. And what that means for us is that if we have to pay these fees and this tax, we would have less money that we are able to then invest in content, which is our primary purpose. And actually, we're sort of also forced to do because we have content quotas and investment quotas to comply with at a national level. And this ultimately is a loss for consumers because not only they are the ones that actually demand access to content and drive demand for traffic, but they are the ones that would have less access to less content or less quality content because there is just less around because we won't have just enough investment available for that. So that is where sort of our concern lies and our concerns comes from. It's, you know, I hear Jacob's point that it's bigger than that, and it's sort of there is a bigger picture around, and very happy to look into that and see if there is actually a problem. What can be done? We on our side, we're also obviously investing in new technologies to not only, for example, reduce the sort of energy to make the sort of our services more energy efficient, but also to make sure that the content is stored closer to the consumer. So that means also less burden on the networks. There are all these kind of things that we're trying to do to make sure the ecosystem works and is sustainable. But we just don't see how a direct payment into the pockets of a very selected number of internet providers would help any of this, or would actually help achieve the digital decade target. That's basically all I want to say for now. Again, I said there are much more I could have said, but a lot of it, net neutrality was all mentioned, so I don't want to be too repetitive. Thank you.
Thank you, Julia. Now we move to an interesting angle because it's a slightly different angle because we have a major American company, but a communication company that is different from the companies we have now. Audrey, you have the floor.
Thank you, Pierluigi. No pressure with the introduction. I wanted to thank you very much for the invitation and for the opportunity to speak to you today. I really welcome the dialogue and the discussion, and I'm learning a lot today. I'm going to share a number of data points, and as a disclaimer, okay, these data are coming from my chief economist team. And my colleague Urska Petrovic, she's listening today, helped me to pull out all this information. And as well, my colleague Tom Corcoran and Sarah Lansner helped me to draft my point. So I wanted to give credit to the team as well. A few words about Qualcomm. We're not that big, okay? But we have always been a promoter of strong and open digital ecosystem, and we are really committed to a flourishing digital ecosystem. So we work with most of everybody in the value chain. And for Julia, just to tell you that we really like content industry, and we like them so much that we got awarded by an Emmy Engineering Award in January. It came out of the blue, and we realized that, you know, Qualcomm could be cool as well for the content industry. So I just wanted to share that with you. Of course, we work with Deutsche Telekom. We work a lot with Google, and we're very happy about the partnership that we've been having with all the players in the industry, and, you know, thinking together on how we can enable more virtuous and virtual circle would be very important. Despite that, European physical network sits at the core of digital ecosystem, but they are as well at the heart of our economies and societies. Our infrastructure needs to be able to meet future demand for 5G and prospectively for 6G, because 6G is coming. And this will be driven by a host of exciting new technologies and services, from the metaverses. I didn't hear a lot of this word today, but this is coming as well, and right through edge computing that William mentioned earlier today. So for this reason, of course, we're following with great interest the current political debate on broadening the financing scheme of network infrastructure. We do support as Qualcomm the European Declaration of Digital Rights and Principle for the Digital Decade, which calls, it has been mentioned a number of times, but just to repeat exactly what the Charter Declaration mentioned, establishing relevant framework to ensure fair and proportionate contribution of all players. So Pierluigi was talking about efficiency and distribution, and I would like to put like just 5 points for reflection and discussion. The first one, and it's going to be about we need more, okay? So one, we need more investment. Jacob mentioned the delta about 100 plus billion euros that is missing in order to have full rollout of connectivity. That's just a reality. We will see the exact number when the Commission will compare all the data that will be shared, but that's just missing. My understanding is telecom operator will continue to invest because we pay them to do that as consumers, and this is what we should expect for them. But still, there is this gap. Okay. And so thinking all together what could be this kind of new model for the future is very, very timely. And without it, we will not be able to build sustainable digital infrastructure we all need. And so we're putting at risk all the benefit that we can get for better connectivity and technology. And this will hamper, public service delivery, smarter home, smart cities, and as well just better consumer experience, or really enjoying watching some of the movies that we really, really like. Point number 2. Sorry to say, Scott, but my economists are saying that mobile data is increasing, okay? And it's not going to stop. And in a way, it's a good news. So what the number we have, and we can debate about that with my economists, but mobile data traffic is already growing by 30 to 30% annually. Global mobile traffic is expected to grow 4 to 5 times in the next 5 years. Then mobile data traffic per smartphone in Western Europe is expected to grow at a compounded rate of 18% between now and 2028, reaching 52 gigabit per month in Europe, exceeding world growth, which is inferior to 50 gigabit. Then the progress toward the connected age will be the primary driver of data growth, and William mentioned it as well, and when we talk about future technology. So total household data usage with expansion of the metaverse, and this is forecast, okay? But with the metaverse, we expect a growth of 24 times by 2032. And this is combining, I would say, indoor connectivity plus outdoor connectivity. Point 3, we need more debate. And I think this is a perfect forum with EUI. And we understand, at least my understanding is the European Commission will work on something. We don't know what is this something, but something will happen, whether this will be during this mandate or for the next mandate, but something is happening. And I think Jacob mentioned it. I tried to remember everybody. Jacob mentioned the geopolitical dimension about this topic as well. This is not a niche topic only for European. We have a similar debate in the US. We talk about Korea, and other countries are looking into it. So this is as well how we put the benchmark and we set right the discussion for the future. So we need more contributions. So it's a call as well for all the people listening to us today. It's good to have different perspective and bring different opinion, because that's the time to really share a lot of data point. And if some of you are not happy with the question, you can still, there is a part at the end of the consultation where basically you can answer whatever you want. So there is still the freedom to, if some of the questions are not answered, and I'm not talking on behalf of the Commission, but just I'm working on the consultation right now. My last point, probably we need more as well regulatory innovation. And as Qualcomm, we are defining our position. We don't know yet all the answers, okay, on how we're gonna address all the answers, because whether or not we like the way the questions are framed, it's quite complex to answer to the consultation if you want to really put some efforts in it. And we are doing it, and it's damn difficult. So I just want to share that as well. But we will see how we're going to make it happen. In the way of we are thinking right now about it, we are thinking probably the Commission is putting some kind of hint in terms of potential solution. And maybe there could be other one, but we see some potential solution on short term and more long term. Jean-Jacques mentioned some of them, but just on the short term, and Jean-Jacques didn't mention this one, but I'm mentioning it, market-driven solution could be part of some easy fix solution from time to time. And of course, it depends, on the context, but market-driven solution with alternative dispute resolution mechanism solution could be part of the answer. I'm not saying it will solve everything, but that's something that maybe could be an easy fix. On the long terms, there is the question of the funds, which is still not existing in Europe, but maybe the funds could address some of the point when we look at the big picture. The question of mergers was tackled as well. And of course, there is the big elephant in the room with spectrum, which is not going to be solved even with a new mandate from the European Commission. There is another point I wanted to mention, and I don't think this is one of the questions of the European Commission, but something that whatever scheme the European Commission will put on the table, whether there will be like new money coming, okay, whatever this is with the fund or alternative dispute resolution, it's going to be very important in terms of transparency and accountability to really explain where the money is coming from, how the money is used, and for what. Because at the end of the day, this is where we will see if the policy decisions are good or bad and future-proof. In conclusion, solving the investment challenge will lead to all-around net benefit for society. And as Qualcomm, we are committed to engaging in the discussion and working with all of you on your future-proof model. Thank you.
Thank you very much, Audrey. Well, to conclude this first tour of table, we have now Rosalind Layton that is in a position to try to bring this together somehow. Rosalind. No, we can't hear you yet. We see your screen, but we can't hear you.
Okay, good afternoon.
Yes.
How about now? Good evening, everyone. It's an honor to be here. Thank you, European University Institute. I'm so thrilled to be with such excellent colleagues and to follow on so many great points. I'm going to talk today about broadband cost recovery and the methods of doing this. I'm going to perform some fact checks. I have some response to the panelists, and I'm going to follow instructions and provide a key takeaway. Or maybe we do that at later. But I want to thank you, Anna, especially. You did such an excellent job to put this together, so much work and so many good questions. And also Pierre Luigi. It's really so constructive. In fact, constructive controversy that we have. This really is what we need to move our discussion forward. So I know in Europe, we talk about fair share. In the United States, there's a discussion about universal service fund. In South Korea, there's a talk about covering the network costs. And so these are all similar but different discussions in some ways. So I like to use the term broadband cost recovery because at the end of the day, what we're trying to do here is to make broadband more affordable, available, and accessible. And absolutely, this is about closing the digital divide, reducing the burden on end users, but also, I would hope, giving them more freedom. And then we do need to ensure continued network investment and upgrade. And it's also through this process, some of you have mentioned reform. I think that's absolutely true. I think we sell broadband like it's 1995, as if email was the killer app. We're not, the models have not evolved. I mean, Bill has so many good papers. He talks about the CDN overhang. We have an architecture that wasn't built for video the way that it's delivered today. So we also now have social requirements for broadband. There's very asymmetric and disproportional traffic. And so we need a process to look at that. And I'd like to suggest that we can use the regulatory process to identify the targets and shortfalls, to find a way to account for them, to appropriately attribute the cost. We can apply the appropriate financing model. We can resolve the inequalities, and we can forge the broadband equity empowerment we're all seeking. So that is a very linear process that we understand. Of course, this is going to depend on having good information, I know there's some doubts about what will come out about in the European Commission process. As we know, a lot of the discussions between the companies are proprietary and confidential. So we're missing a lot of valuable data. That is one of the things that makes it hard. Now, in my own research, I have been lucky to actually get some data, not necessarily interconnection agreements, but my specific area here is I've worked with now 50 rural US broadband providers in the United States, looking at fiber to the home, where they gave me their traffic data. We used a survey tool to collect it. We looked at 3 to 4 years of cost data. So we actually can see what's the traffic and what's creating the cost, and we can attribute it. And that is something that needs to be done on a much larger scale around the world. And that is at Strand Consult, our project. We're kicking that off in other countries and looking at mobile networks in Africa, for example, so we can be able to help bring to the discussion this kind of data. And it builds upon, I had great fortune to work with Bill as my PhD advisor, and we've been studying network trends and, impacts. Of course, this is ongoing, and MIT does an amazing job on this that looks at how has the internet structure changed. So, and also I have a report about South Korea where I've got access to the court documents between Netflix and SK Broadband. And it is a fascinating discussion of countless emails being sent to Netflix about how do we resolve this 24x increase in traffic overnight, and Netflix refuses to respond. So of course, that's not the whole of the discussion, but there's a lot more information we can bring to the table. And it's great that there's now an opportunity through the European process. So just briefly, why, I have a particular, I think as we started out in a good way with Scott, looking at this aggregate level, I think they're very helpful when you look at the aggregate global trends. What's important, however, is you need to drill down to microeconomics. You've got to look at the individual firm level, and you have to look at the type of technology. Are you on a fiber to the home? Are you on a mobile network? They're going to be very different. And what I'm not trying to say is I'm going to extrapolate from one company across the board, but it's valuable to see, do the overall trends, are they true for an individual firm, particularly if you're looking at a rural case? And it's very relevant for Europe because we have a lot of underserved or rural areas across the European Union. Even in places like, I live in Copenhagen in Denmark, most of the country is in fact agrarian. We have most of the population in major cities. So these are very relevant discussions. And what we found quite simply was that over the 3 to 4 years we studied, that the traffic that was make 75% of the traffic could be attributed to 5 streaming providers, and they accounted for 90% of the OPEX and CAPEX in the networks we studied. And that is a staggering number. We also identified that every dollar of streaming revenue earned by the streamers created 48 cents of cost in the middle mile. This meant that the streaming traffic into the networks, these rural networks, they had to buy the infrastructure to support that streaming traffic, whether it was the servers, whether it was the electricity, the laser cards, you name it. They had to provision that if in fact they want to deliver it to their end users. So it's a real cost for them. And the other challenge is that they don't have the ability to raise the prices on the end users. They may have 10,000 customers, maybe less. So they're actually losing money on their streaming revenue customers. And this is the traffic, even in their modern fiber to the home networks, it's crowding out the social benefit services. So this is making it difficult for public safety and the telemedicine and the other services to use the networks the way that they need to use them, because 75% of the traffic is movies. So this is a real challenge in that case. It's not only in rural areas. I mean, you can look, I think South Korea, extremely urban country. What happens when, your network traffic explodes 24x overnight and only, 25% of your customers need that traffic? How are you going to recover those costs? And particularly because the provisions that you need to do for Netflix, you cannot leverage for other content. So you are out of luck. You have to provision the things that Netflix wants. You can't use it for Hulu's data, for example. So this is it's really inefficient from the point of view of these providers. The other thing that we discovered, so we since subsequently, this is my co-author, Petros Potgieter and I, where we posed our questions again to a larger sample, and we found that their cost to provision video was growing 2 to 3 times faster than revenue. And that the operators in this case could not raise the prices to recover those costs. It's just not possible in this particular environment. So now, what I'd like to take one step back here for this discussion and to say that there's not only one solution on the table. I actually think it's going to take a range of policies, a range of things to address this. And these are the 5 buckets. And I think we should think broadly and widely about doing this. So first of all, cooperation. I think Google talked about cooperation. I think that's great. You know, of course, when Google cooperates, they're going to get paid. You know, they're not providing their things for free unless it's there's some benefit back to them. But let's look at things like global multicast. Maybe that's something, as I understand it, you could squeeze another 30% of efficiency out of certain cable content. There are things like turning off auto run, you know, when you get ads will automatically come when you watch YouTube videos, for example. But this is not costless, and it's also going to require standards and investment. Something else I think absolutely is liberalizing the end user pricing. Something we could do today, you know, when I took an Uber into Chicago last night, I see on my Uber bill, your price is higher because the city of Chicago charges these fees. And they make it transparent for me, 5 different fees to drive in from the airport into Chicago. So this is one thing that telecom providers can do. You want to have these particular movies, this is what it costs. Now, of course, Netflix would have a heart attack if they started to make this transparency, but it's actually correct that there are particular costs to deliver certain kind of data. And presently, it's now brought across all the customers, which is actually not fair because certain customers are going to have usage, but that's what you get with a flat rate model. Other things like premium subscriptions. This is being promoted by Ofcom right now. They actually say in their consultation about modernizing net neutrality that end users are being denied the ability to have a premium subscription. Let's say we wanted to have higher quality for this particular Zoom call. We just wanted it for this time. We can't buy that now in Europe, unfortunately. You know, we wanted to buy a quality guarantee. That would be something that many of us would like to do. Also things like sponsored data, you know, that was really important in the Julian paper, for example. Now, when we talk about cost recovery, there's 2 types. There's a market-based and there's a regulation-based. What's going on in South Korea is a market-based. And I know there's a lot of misinformation out there. I have a slide where I list the actual laws that are applied, but this is a market-based cost recovery. In this case, the companies at issue, they need to have an agreement, and there's not a government fee as to what the amount is, but they do specify that companies have to negotiate that network access is not free. And that has been the case for some time in South Korea. We'll come back to that. The other things we could look at is values sharing. You know, why is it if you're on Netflix, you know, they can offer an ad-supported subscription. That's a way that they can deliver, make their product more available for lower income users. Why can't we do that for broadband? Why couldn't we have an additional price if it was some premium content, for example? So, that is another opportunity there. I think it's quite interesting now. You see that Netflix, just with their latest earnings report, they're expecting to earn $1.5 billion through their efforts with ending the unlawful use of accounts. Now, it's interesting, if you freely use Netflix, they're now going to shut you off. You will not be able to stream your Netflix content. If for some reason that's not a net neutrality violation and that's not blocking the end user, but Netflix now expects to earn money by being able to crack down on people's unlawful use of their accounts. It's significant for them. This company understands what cost recovery is about. Now, what's going on in the United States is universal service obligations. This is a bipartisan effort to look at bringing the edge providers, or what you'd call CAPS, content access providers, into the Universal Service Fund and how that would work. Other ideas have been promoted, like an ad tax. But I think now there's quite a bit of interest to go in the USF route because of affordable connectivity program. There's 14 million Americans who get a subsidy program that started in COVID, and there's a desire, bipartisan desire, to continue that. And given that the edge providers get the benefit of new users, that this is a way that it could be funded, and we have the mechanism in the United States to do it. Now, one other solution we could have here is we can accept the shortfall. We can just change our political expectations. We're never going to meet our targets. We're not going to have next generation networks. It's okay. People are not online. That's also, in some ways, that's a de facto, the commission keeps pushing out the broadband targets every 5 or 10 years, never getting there. So I think in some ways, there is a sense of that fait accompli, but it doesn't have to be that. But in any case, I'd suggest to you that there's a lot of room here for improvement, and we have a lot of business models to do it. Now, we definitely mentioned T-Roll. Scott mentioned T-Roll, and I certainly tremendously value that work. And what I'd suggest to you today is that we don't have a proper two-sided market, because the negotiating part of each of the two sides is artificially abrogated. So for example, net neutrality, it essentially does not allow the end users to negotiate with the ISP for different kinds of offers. There's de facto flat rate service, and there's no zero rating, there's no differentiation. Again, if the point I think Scott made very well was that T-Roll wanted what was socially beneficial, then we need to have more liberalization on the consumer side of the market. We need more negotiation. And this would certainly support what Bill was saying about edge users. They need to have this freedom to negotiate with the different actors. They don't have that today in Europe. On the other side of the equation is the ISPs with the caps. And that is very tormented, as we can see with the various court cases, certainly in the tone of the discussion today. It's, frenemies, if you will. But basically, it's not a proper free negotiated market if, in fact, you can just stop paying and there's no, you have to go to court to be able to recover your revenue. Alternatively, if the assumption that the price is zero, so we obviously need to look there, and that's what I would suggest. Let me go ahead here. I want to talk quickly about cost recovery in South Korea. They have a slightly different setup than European Union and the United States that makes it different in the sense that broadband is a common carriage service, and if you're not an ISP, you're an end user. So everybody pays to access the network. There's no presumption that you're paying to access some other content. And so that makes things a little bit simpler. The other thing to know is that presently what this discussion is, we're the 5 largest content providers in South Korea, which can include 2 South Korean providers. You've got Google, Netflix, Meta, Naver, and Kakao. They need to have a negotiation with broadband providers to recover their costs. And the Korean policy recognizes that there's that the responsibility to deliver data in a quality way is a shared responsibility. And that should not be controversial. In fact, Analysis Mason actually wrote that in 2014 in their report, as I'll show you. But basically, there's a recognition that this is not one side or the other, it's a shared responsibility. What is paid is up to the parties. But what the government of South Korea does not want to happen is a refusal to supply. And that has been the problem, is that you've had large players saying, I will only deliver my content into your network if you accept a price of zero. And that is why you have 7 bills that have been drawn up by multiple parties under what's called the Free Ride Prevention Act, which would stop refusal to supply by large players. So this situation is still evolving in South Korea, but I think we should certainly learn from it because it's world's #1 broadband nation. And I think there's also a bit of misinformation. A lot of parties like to go out and say things are going bad in South Korea, but that's not what the data shows. You have multiple consecutive annual reports from OECD and ITU showing why South Korea is the world's broadband leader. All of the policies that have been developed over many, many years and evolved. So this is a multi-party, this country is on top of these issues. And that means that things have to change, and they're not afraid to do that. They're not going to sit on the sidelines and say, oh, everything's fine. They're actually going to get together and work things out. And that's the result. That's what you get of 20 years, 30 years actually, of their progressive broadband policy. The other thing the data shows very recently is adoption, and that is next generation adoption, highest in the world, both for 5G and fiber to the home. So this to me is the evidence of why the policies in South Korea are good for consumers. You reduce the burden on consumers, that the content providers pay their fair share, if you will. So all consumers are not overly burdened by video streaming costs, and you make it easier for consumers to get online. And that's important because the South Koreans understand their digital economy. They export digital goods. They need to have everybody online. And it's more than about just watching movies. And also the important evidence, contrary to what Google will say about the country going to hell in a handbasket, is that the nation is now 7th in the world for content production. They are exporting movies and music and books and all kinds of content to the rest of the world, not just to Southeast Asia or other parts in Asia, to the United States. They have won Emmy Awards and Oscars and all kinds of awards. And so this is a great example of a country that's very savvy about using their platforms as a form of digital economic development. Again, related to a number of policies, education policies, subsidy for artists, a whole range of things. But there's not an evidence that Korea's internet policies are hurting its content economy. On the contrary. Finally, I think we should look at the financial record. When you look at Google and Netflix, again, trying to dismiss what's going on in South Korea, both of these countries reported record revenues in 2022, in spite of having litigation and fees that they in front of them. They are actually making more money in the country. And it makes sense because when you have next generation networks, you can just deliver more movies and you can show a lot more advertising. So the amazing part about these kinds of policy discussions is that if we can enable more next generation networks to be built, that all of the edge providers and the caps are going to do well. Just quickly here, United States, I think important point to also recognize, similar to South Korea, where you have a multi-party effort behind the policy, you have the same thing in the United States. You've got the senators from both parties where they're really focused on helping affordability issues, helping close digital divide. And they actually recognize that if you're going to talk about affordability and universal service, that the caps need to be a part of that. And this bill has been reintroduced for $1 million to study the feasibility of the Universal Service Fund, and the FCC would do that. So if you look at it in this context, what European Commission is doing is absolutely what they should be doing. They need to conduct some kind of proceeding, and however they do it, this is certainly what the United States believes needs to be done. And both parties in the US agree to this. And if you want evidence-based policy, it does take time, energy, and money. You've got to pay the bureaucrats or the consultants or whoever it is to do the work, but they recognize that has to happen. I think in US, you could look at something like $20 billion a year to be supporting affordable connectivity that would take care of things like the existing universal service program, so the burden would not fall on consumers the way it does today. There's a historical precedent for this. And the regulators don't see this. This is actually FCC driving it. They don't think this is a cost. They think this is a win-win solution because the FCC has a statutory obligation to address broadband and making sure that it's deployed in a reasonable fashion and in an affordable way. And I would also say this is also involving social justice organizations in the US, which are very involved in seeing this as a digital equity issue, and that the large tech companies need to be a part of it as well. I would also suggest take a look at Australia, where the digital code there has, for many observers, has been successful in bringing $200 million annually to the publishers. And this is going to small, medium, and large publishers. You know, again, there were predictions by Google and Facebook that the world would come to an end, but they have this for a couple of years, and it appears to be working. Similarly, this is not a new thing. I mean, you need to look at the ITU and UNESCO did a major report on this financing models 2 or 3 years ago. A lot of this stuff is laid out from, developing world context, but these same kinds of models are there we can all learn from. So this notion that, the EU is just kind of inventing things as they go is actually not the case at all. We want to quickly do a fact check because a number of things that Google mentioned, they're kind of these claims that have been put forth by the report from Analysis Mason. And I have read this report in quite detail, and I'm now publishing a fact check about it, which goes down to every single page and looking at every piece of data. And one of the things that has been promoted is this amount of 83 billion a year invested. Great, I think it's great, but these are not invested in connecting end users. I mean, this is Google investing in its own data and it's what it needs to run its own company. Fair enough, but that's not what we're talking about when we talk about, the infrastructure that connects end users. And when you look at the amount that the CAPs invest, it's about 1% of their revenue, whereas ISPs are putting forth 20 to 30% of their revenue. So the risk is much more on the ISPs when they're making these investments. And they're also have to do it in regulated places. If you notice, the data centers and the undersea cables, they're all in places where they're not regulated because they don't want to be regulated. I understand it's not nice to be regulated unless you get it in your way, but they're purposely putting in a place so they don't have to have these obligations that their competitors do. And then if you just compare the pure numbers, US broadband providers alone are investing more within the USA than the numbers put forth by Analysis Mason. Additionally, I can't verify the numbers because they come from Analysis Mason. They're not publicly available. Some of them are. In prior reports, they were more specific, but we don't have them. The one other thing I'd say is on this, there was this suggestion that this investment is saving broadband providers money. That may be the case with some large ISPs, but certainly not with the companies that I looked at in rural USA. They are not experiencing benefits because of what Google and Meta may be doing with undersea cables. And in fact, their emails to those companies are not even returned. So they don't have a relationship with them anyway. They don't have any, they just receive the traffic. And I would suggest that some of the data in this report is cherry picked, where it's looking at a 4-year time span of a 10-year investment to try to make it look like, oh, this is somehow helping the ISPs. In any case, there's a lot there. I know we're going to wrap up now, but I want to one last point is that the in the WIC paper, which I know Scott is with WIC, and there's a lot of discussion that things are bad in South Korea. They referred to a report from Telegeography. So I contacted Telegeography and said, this is the claim being made. And the author of that report said, this report has nothing to do with South Korea or transit prices. So I would suggest to you that some of the data being put forth in this discussion is not all of it can be fact checked and not all of it's verifiable. So I think it's important to know that. In any case, there is a lot to share there, and I guess we're going to go to our last point. Just the takeaway I want to say, this idea of fair share, it can rub people the wrong way. This was something created in the EU Digital Rights and Principles. None of us can agree to what is fair. And I think that's all of us have a different notion of what that is. But we can probably agree that things are not free. We know that there's a cost one way or the other. It's how do we recover that cost? And I would suggest that we can have more transparency to do that.
Thank you, Rosalind. Let me say that Analysis Mason is not here, so I will have another occasion in which I will invite Analysis Mason to be able to replicate. Let me put this, because while the discussion is open and there are all the positions, when somebody speaks and is not there, I think it needs a reply at some point, and we will do that. Okay, before going to the, as we promised, we want to give the floor to all the panelists for a sort of takeaway message of 1 minute. At around 15, max 20, we'll finish. Let me give us the floor a second one for mentioning a couple of questions that may help your takeaway also. There are a couple of observations that are interesting in the chat.
Yeah, so David Geary has mentioned, I think, a very relevant question which has been present during this discussion, which is how can we basically have a good policy if we don't have good evidence? So it's about getting access and being able to analyze good evidence. And it seems that sometimes companies that ask for regulation then deny to provide data. So it's simply the question of having right data to gather the necessary evidence. And the question to Rosalind is from Alexandra Veller, who is asking, if I'm paying for FTTH, wouldn't I expect my Netflix or Zoom to be premium quality without having to pay an extra premium? So these are the two questions.
Yeah, very, very interesting question. We have to wrap up with a very quick message from each of you out of this discussion. Then Anna will build a sort of summary of this discussion later on, and this will be circulated to all of you, and then we will publish it in the form that we all decide. Let's start again from Scott. Scott, the message.
I think the big message is that this has been a very useful exchange, a lot of data and a lot of views. I'd like to thank the Center for Digital Society for having put it together and for having invited me to speak. One thing I was especially struck by is that in hearing the comments, for example, from Jakob Greiner and Jean-Jacques Sahel, both of whom I consider to be very reasonable people, I agreed with nearly everything both of them said, even though they're making almost opposite points. So I think it's been a really useful and productive exchange. And once again, I thank all the speakers and the organizers.
Thank you, Scott. William. No, we don't hear you yet.
Sorry, I agree with what Scott just said. So thank you very much to the organizers. I think this level of discussion is wonderful. If the process that's been launched by the EU actually builds towards that and further discussion here, that will be wonderful. Part of that, I think, will depend on how much of the comments and the data that's contributed actually is made transparent and shared in the process. And I think that, you know, every single one of the points that, for example, Robin Layton brought up and possible solutions, these are all discussions and arguments that I think really need to be looked at much more carefully. And I think that, like Scott said, you know, there's so much to agree with what both parties said, which then says, gee, if they disagree, but there's so much we totally agree with, then we really need to look more closely. And I think it just says that this sort of engagement is going to be important, very much part of what's needed in the future.
Thank you. Giuseppe.
Well, I will stick to my claim about the limits of regulation, which are particularly critical when it comes to fast-moving industry, as it is challenging to design let's say, a future-proof framework. Therefore, especially when dealing with digital transformation, I think it is appropriate to embrace what has been called the regulatory humility, acknowledging the inherent limits of regulation and refraining from picking winners and losers in the marketplace and from promptly intervening in absence of solid evidence of market failure and consumer harm. Thank you.
Thank you, Giuseppe. Antonio.
Yes, I would like to join everybody in thanking for the organization. It was very fruitful and very informative debate. And I think this kind of debate is something that is really needed in order a bit also to get away from the polarization opposition that the market is facing at the moment. And I think both this kind of debate based on the, more, let's say, academic kind of consideration, but also evidence-based consideration. So really considering the market data, the market situation. And I still consider that this consultation, exploratory consultation, could be useful just also in first instance because of that. So providing some data, providing some information, and starting an evidence-based policy. And for sure, I mean, connectivity is crucial for our society. The positive externality that connectivity are giving to the economy and society is incredible. The market, the ecosystem is changing, and we have to consider a more holistic approach to the ecosystem. Also, the regulation should consider all the actors and all the actors, all the contribution that the actors are giving or can give in a more coherent way.
Thank you. Jacob, what do you think? What is your final message here?
Or maybe just 3 points. One, reacting to the question, do we make our contribution public? As much as we can, we will. Some questions that are going very specifically on investments, we will definitely not, because this is just with our dear competitors, a bit of a sensitive topic. But anyways, I think even if there's something confidential, the information is not going to get lost, because who should assess it? The European Commission, and they will have everything on their table. Second, going back to Jean-Jacques, and I listened very much to the symbiotic relationship that we're having, and I can only support you there. Indeed, we are cooperating in many ways, but let's not be naive. That doesn't mean that I'm going to keep my mouth shut, or telecoms keep their mouth shut when we are having some disagreements on regulation. I think that's a very normal thing to do in this. We had this on the DMA as well, and I think you need to handle that as a company as well. And third, coming maybe back to Pierluigi's introduction to make us ready for this fist fight, which I think was a very fair and diplomatic fist fight, to say, the sector is not well, and maybe that's why we're in a way aggressive. I would picture that as maybe a tiger or a lion that is weak and now it's lashing out. I wouldn't say this is why we're having this discussion. We have the discussion that we need telecoms as a tiger or a lion and not as a mouse. And that's why I think it's good that we're talking and having yet another discussion on this topic. And I think we have to have a long breath, because this discussion will surely not end after the 19th of May. And I appreciate the open dialogue and the open controversies, because that's what we need to do in order to get to a result. Thank you very much.
Thank you. Jean-Jacques.
Thank you. I think I'll join a number of other colleagues in hoping that this is only but one of the discussions. There is so much in there that we should discuss. I'm also thinking about the fact that we probably need some new sort of misinformation policy in there, because it's quite a lot I would like to rebut, but we just don't have time. I really think, the reason we do need more of such dialogues, because we really need to think about this from a public policy perspective, what we're trying to achieve for Europe and beyond from the perspective of socio-economic welfare. And for that, we need a proper understanding. We need a holistic understanding of all the contributions out there to the whole of the ecosystem and of how it works together. And then understanding how that in turn can then deliver for our people and our businesses and our countries. And a large part of all that and all of our targets for the future should be around digitization, should be around how we use the content, the applications and services that are made accessible thanks to connectivity in order to sustain, to support our economies and our societies. That's the starting point. What are we trying to achieve that's good for our economies and societies? That's the long-term vision. From there, let's look at all the elements that are needed. Let's look at the right balances. Let's look at who's contributing. We do need content, we do need services, we do need apps, we do need networks. Everyone should contribute, but let's do that in an intelligent manner. And I think we should do it together. And yeah, absolutely, we shouldn't shy away from difficult questions, which is why I'm surprised that they never came up in our one-on-one discussions between partners, but I'm very glad that they're coming out now amongst policy people, and I hope that we will generally have proper policy debates, because it's too important, the future of Europe, for it to be just overtaken by lobbyists' discourses as opposed to proper policy exchanges. So I look forward to the next one. Thank you.
Thank you, Jean-Jacques. Julia.
Yeah, thanks. Yeah, thanks for Luigi, and I guess all I can do is really also obviously join the choir in thanking you and Anna and the team for organizing this timely debate, which I'm sure won't be the last one, and also for including sort of other voices rather than just both sides, as some have referred to here, because that's important part. And I would just like to conclude to say that I think there is more alignment that we'd like to admit actually on certain things. We're all committed to digital decade principles and to make sure that the internet ecosystem in Europe thrives. We just may happen to disagree on the way to do so, but obviously looking forward to continuing the discussion on that. And I guess our main plea at this stage to especially the European Commission and the EU is really keep going on with the better regulation process and make sure there is a due process, public consultation, impact assessment, and every aspect of this debate and ecosystem and issue is thoroughly looked into before rushing to any conclusions on whether a policy solution is needed. Thanks again.
Thank you. Audrey.
I would just like to make a message to, if any students are watching, I just want to encourage you that why you should go into this field, why you should study tech policy and telecom policy. It is so exciting and so important, and it's right at the cutting edge of the most important things of our whole world. So I really thank the European Institute. We all want to come to Florence. If I can just recommend something, would you just have this in person and we can meet in Florence? That would be great. But I'm hoping for people who will, thank you there, Scott, who will watch this again to truly consider the great European programs in this. My own university, Aalborg, we have at the Center for Media Communications and Information Technologies. We look at that. Bill is at MIT. So there's so many important ways that you can learn and be involved as an academic. And it's very exciting, and you can make a difference in the world. So I want to thank you, especially that you were able to give the academics a chance to speak today.
Thank you, Rosie. Then Audrey.
Thank you. So just a few takeaways that we were discussing. First, I agreed with everything Rosalind said. Okay, even the Florence part, which was the last point I wanted to mention. But more generally, the world has changed. We talk about net neutrality on various aspects, and I was already discussing about that with Jean-Jacques like 12 years ago in Brussels. But the reality is the world has changed, and as well the way regulation is done has changed as well compared to before. As well, looking at the big picture, I think we still need to look at this and not just the fist fight, but what is the network we want for the future and how we want to have this kind of digital transformation for business and consumers, finding the right balance on efficiency and distribution, very important. And what I really like in this debate today, we had various examples of the balance between, I would say, the topics, discussion, the value of argument, but as well in terms of genders. And I believe this is something as well very important to have diverse views and diverse representation. And my last point, just to re-emphasize what Rosalind said, we really need to continue this discussion in Florence. Thank you.
Thank you. Okay, let me conclude the first answer to the consultation. Let me say that this is very important for everybody. Second, let me assure you that after the study comes out and the result of the consultation comes out, we'll invite you again, maybe in Florence if possible, by the way, to have this discussion again. Third, let me say just one word of economics. I think we should think a little bit, because I heard all this discussion about the cost which we have uncertainty or a different opinion. I think that marginal costs and costs of adding pieces of network are different stories. So this cost discussion should be dealt with kind of digging more on the issue. Costs are always a tricky game for economists and for everybody else even more probably. Finally, I think that one thing that I want to say that we will do in the next, looks unconnected, but is strongly connected. One of the next efforts we'll make at the Center of Digital Society is to look at all this European regulation all together and try to look how they should fit together. And I think this is connected also with the discussion of today. So it will be one of our next effort in the next weeks and months. And finally, let me thank all of you, the participants, and all of you for being with us today. It was very informative, very, very nice. And especially let me thank Anna for the passionate and the efficient organization of this meeting. Thank you very much to everybody.
Thanks, everyone.
Bye, thank you.
Thank you so much. I hope that everyone enjoyed the discussion. And I think if we were to have another one in Florence, we could actually broaden the point of view, because today we have focused so much on the traffic generated content, but there will be so much traffic produced by IoT, and that can completely change the discussion we are having today. That's one. And second, I don't know whether it would be a neutral party, but if we had a view from the private investors, and we have heard that one during our webinar on WAC, I think that would be informative, because that would be that would provide a completely different angle. So I hope we will manage to put an event in Florence with a wider set of stakeholders, and that we'll manage to get someone also from industries that might be affected by this discussion, but that as of today, we're not maybe willing to take a position officially. So just to keep the debate heated for the next few months, at least.
Thank you.
Thank you all very much.
Thank you.
Thank you. Bye, everyone.
Thank